All right, what up YouTube? Welcome back to the channel. Another episode of the Crypto Breakdown. I am your host, Ryan Matta. Topic of the day, how to crush it trading crypto in a downtrending market. Let's dive in. Let's get it. And of course, as always, this video is for entertainment purposes only. I'm not a financial advisor. I never advise you to invest in crypto in any way, shape, or form. Thank you. Let's dive in. So how to crush it trading crypto in a downtrending market. We're going to talk about lower highs versus higher highs, higher time frame trends, testing support, risk versus reward, and profits versus stop losses. Let's dive in. And real quick before we get started, squad, I apologize. I did not know I had background music playing here, so I'm going to re-record this video after the fact, but I have trades in here that I'm actually eyeing up, so that way you guys can actually see potential trades that I'm going to be taking. Moving forward, every morning, I'm going to try to record a video like this that shows potential trades I might be taking. I'm not going to share my actual trades on YouTube, A, because I don't want to get in trouble, and B, I don't want you guys taking trades because I'm taking trades. The only place I'm sharing my trades or trades that I'm going to be taking is in my private Telegram group, but this will give you a general idea where some potential really good trades might be to take right now, and I'm going to publish this video immediately. So the first thing I want to point out is the higher time frame trends. For example, if we take a look at Bitcoin right now and we are on the 1 hour time frame and we see the chart the way it's looking right now, and say we jump over onto the 5-minute time frame. When I'm looking at this chart on a 5-minute time frame, it looks like Bitcoin is on or was on a major uptrend, and now our uptrend was finally broken. Now, if I jump back over here to the 1 hour time frame, it's really easy to see that we are in a downtrend. Now, if I jump back over onto the 4 hour time frame, it's really easy to see that we are in a major downtrend. So understanding what time frame you're using and jumping back to the higher time frames and relying on your higher time frames to dictate your longer term plays. When I'm scalp trading, I'm on a 5-minute. When I'm making longer term predictions and longer term plays, I like to trade on the 1 hour. 1 hour time frames is probably my favorite chart to look at as far as trading crypto. With how unpredictable crypto is and how volatile the market is and how quick things change, trading off a 4 hour, 1 day or 1 week like people do in Forex, I think more times than not will get you wrecked. Now, let's jump back over to the 1 hour time frame. And let's talk about higher highs versus lower highs. When I'm looking to take out shorts or place any long-term plays as far as trading in a downtrending market, every time Bitcoin crashes, we will see this rapid push to the upside. And what happens every time price starts pushing to the upside? The moon boys start screaming, bull runs back on, hopium, hopium, hopium. And what happens to anybody that buys into the hopium? They get wrecked, they got wrecked, they got wrecked. Now, when we're talking about support and resistance, one thing you can count on is the fact that the more times that you test a level of support, the less that support is going to hold. We've now tested this area once, twice, 3 times. This support right here will then be tested for the 4th time. And if you go up here and look, I was showing you guys a little while ago. If you come up here and look, how many times can one area act like support before it doesn't anymore? We see 1. This, I'm going to still continue to count. So we see 2, 3, 4, 5, 6, 7, bam, right? So everybody keeps telling me that Bitcoin's never going to go below 30K. Let's see how many more times Bitcoin comes down and tests this 31K range before that support doesn't hold. Now, as far as support goes and testing support, check this out. What do we see right here? Lower high, lower high, lower high, dump. Right? And what do we see here? Same thing. Support tested. Support tested, support tested, support broke. Over here you can see lower high, lower high, lower high, dump, push to the upside. We see lower high, dump, and we've seen it right here. Lower high, lower high, lower high, lower high, dump. This is why you've seen that I was continuing to add leverage and add to my short and add to my short and add to my short, because every time price comes up and tests this upper level and doesn't push past it, that is just another sign of confirmation that price is going to continue to push to the downside. So right here, I showed you guys, we have the trend that started. All of my students were asking if I was already short, and I said absolutely not. Why? Because I know that they sent price up to here before, they sent it up to here. This time when they sent it up, it was very close to being at this level. But we can draw this trend line across here. This is that resistance, and it hasn't been really able to hit that high. But if there's one thing we can count on, it's the fact that they try to retest this zone. So I want to make sure on the first push up that it's not going to continue to push past the upside. I know that my zone has been made. Why? Because right here, this zone right here acted like so much support that once it broke through, it should act like the same resistance. Now that we are in this downtrending market and they're sending price up again after a major crash, the one thing that I'm banking on is the fact that they're going to come up and try to test this zone at least one more time. So now that I know that it found resistance here once, on this one, it was able to push up a little bit higher, but a majority of them were a little bit below. So now I'm going to go place limit buy short orders. Right now, my first one will be right here at about 37,500. If it pushes up past that, I'm going to take another one at this peak right here, 38,500. And worst case, I would take another one at 39,500. These are going to be my scale-in shorts on Bitcoin, making this next push to the upside. I also will show you guys that I said, here is our 1, 2, 3, 4, 5 pattern. So right here is the structure. I'm going to draw it off to the side so you guys can actually see. So we rise up, hits peak, retraces, rises up, hits peak, retraces, and now should make one more push to the upside. A lot of my students thought that this was the 4-5, like we had already made that fifth leg. We haven't even started the fifth leg. Why? Right here, we have this uptrend. Uptrend started. What happens? Downtrend breaks the uptrend. So now we have a downtrend started. In order to make a 2 or to be a proper retrace, that uptrend needs to be broken. So we rise up, we hit a peak, Bitcoin stops rising, price starts to pull back. A lot of people were coming and trying to short Bitcoin here. And if there's one thing I can promise you guys, that every time Bitcoin has a crash, RSI came down, everything came down. Every reason that Bitcoin began to crash, it's over. Now Bitcoin has the ability, or any coin has the ability, to make a major push to the upside, and you're never really sure how high price is going to go until it stops. So the next thing we have is we have this uptrend started, right? But a lot of people were going up here like this, thinking that this is the uptrend. That is not the uptrend. If we zoom in here and we really take a look at these candles right here, what do we see? We need to come across the body of these candles, or some people do the wicks, some people do the bodies. So when we do the wicks, now you guys see, before, it was already in the uptrend. It was always finding support or staying above this trend line. So right here, how do we have a 3? We have a 3 when the uptrend is broken. So candles just now on the 1 hour time frame started to break that trend. This is now our new downtrend on the 3. And this is going to be a perfect learning example for anybody who watches this video later. When you are making predictions or trying to take a guess where price is going to go, just because we made the 1, 2, 3, 4, does not guarantee we are going to make a 5th. When I chart this out, I need to be 100% sure how far the retrace is going to take place. And if you can see right here, the 0.382, we zoom in here, we can see price right here on the 0.382 to the T, but not guarantee that that's as low as price is going to go. I have a feeling a lot of people are going to watch this and they're going to panic. They're going to think they're going to miss this short, and they're going to start waiting for Bitcoin to get down here. As soon as it drops down again, if it does not push right up to the upside, I think you're going to see a lot of people panicking and trying to get in thinking Bitcoin's going to crash. Bitcoin can now go down to here, find support, and go down here and find support, or it could go as low as 34,738. Now there's rules to the Elliott wave and formation. Rules are: leg number 3 is normally the longest, but it can never be the shortest. Rule is good. That is probably one of the most important rules. So when it's making this push, since leg 3 is already the longest, it's good. It's already longer than leg 1. So it doesn't matter how long leg 5 is or how short leg 5 is. Leg 4, when leg 4 is retracing, the rule is that leg 4 cannot retrace into the peak of leg 1. So we can see, even if Bitcoin retraces all the way to 34,780 right now, it is still holding formation. The pattern is still good. I would not be panicking thinking Bitcoin's going to continue to crash. When we're looking to see how our price is going to go up, I'm going to grab my Fibonacci extension tool. I'm going to pin to the 2, pin up to the 3, and I'm going to pull down to the 4. And we can see right here, these are my key levels where I think price might push back up to. So remember how I said I was going to start scaling in here? Once price starts to push back up to this upside, I'm pretty confident that I can actually enter a position here, and the highest it's going to push up is going to be right here at 39,468. Now I also want to take a look back here because we are making lower highs, lower highs, lower highs every time we come and we push back to the upside. So since I'm making lower highs, I might think that price might not be able to make it all the way back up. And I can just take a guess and go, okay, from the lowest high over here to the highest high over here was 2.5%. I want to take from the lowest high over here to the high right here, 2%. So I take the lowest high right here, and what do we see, guys? It's like 2.5%. So I think that 38,500 might just be a peak. So I'm more than willing and more than confident that I can start scaling into this short right here at 37,580. Understanding how to chart coins out and understanding that the reason I don't put out signals on YouTube, the reason I don't tell people when to take trades, the reason that the only time I give out trades is either on my Instagram, and they're extremely safe, or in my members only Telegram, because my students have taken my crypto coaching classes. They know that when they take a trade, they are 100% responsible for that trade. They're not taking a trade because I said to take a trade. They're not taking a trade because they saw me take a trade. They are taking a trade because that's the trade they want to take. That makes sense. When the market conditions change and I need to tip anybody or I need to alert anybody, I just share it over my Telegram. I can record a video and post it in there. Me driving in my car, me with my son, doesn't matter. On YouTube, I have to edit it. I have to make sure everything's perfect. I will never tell you guys when to buy or sell crypto. I will show you guys my trades. I will tell you guys what I'm doing, and you guys can make your own decisions moving forward. But again, I'm only going to be sharing those in my private Telegram. Understanding your risk to reward. Now, here's the great part about this downtrending market we're in. We've came and we've tested this support 1, 2, 3. And if you see how many times we normally test support, it's normally about 4 times and we break through, 5 at the most. I will be confident to take profits at 31K again. I'd be more than happy to, but knowing that we might break through again, if I can get in at 38K, if I can get in at 38,225, I should not have a problem having a 3.26% stop loss on that trade. Worst case, I need a 5% stop loss. That would put me above this peak. I wouldn't be above this peak, and my reward right now is still 4-1. It might not seem like the greatest. But check this out. Every time Bitcoin peaks up, it always retraces. If we go back over here and we take a look at Bitcoin, even in the bull run, what happens? It hit 41,000, and where did it come back to? All the way down to 28,000. If Bitcoin pushes up again, up to 40, I still think it's going to come back down to 34, 35, 36, because that would be a proper retrace. So how I've been playing this, and this might not work for you guys, this is just my strategy and how I've been doing really well. When I enter this trade at 37,582, because we are on this major downtrend, the larger time frames, the 4-hour, the 1-day time frames, we are on this major downtrend. So I'm confident that as long as we are below that downtrend, then I'm going to be confident to continue to scale into shorts. If price stops at 38,500, awesome. I just nailed that short at peak formation. If it goes up to 39,500, I'm going to double down on my short. That way, price doesn't have to come back all the way down to 38,500 for me to break even. Price now only needs to come down to 3,900. If it goes up again, if I entered $500 here and I entered $500 here, now I'm going to enter 1,000 at this upper level. And I'm going to increase my leverage. Why? Same reason. If price keeps going up, I know eventually when we hit a peak, we are going to have a retrace of some sort. You can take a look at every single time Bitcoin's peaked up, even on the retrace, 10%. So if we make it up here to 32,000, that is a major area of resistance. Pretty confident we're gonna have a retrace. If we make it that high and I scale in and the market changes and the conditions of the market change, I will be confident that we are going to have a retrace, and I will be able to analyze the market at that time on that retrace. If it only retraces 6% or 5%, I'm breaking even or still making profit. So for me to start scaling in right here, if I scale in properly and I add up my leverage properly, and I understand what my risk to reward ratio is, there is no reason that I shouldn't at the very least be able to walk out of this trade breaking even or with the smallest. So that leads us down to the last tip, which is your profits versus your stop losses versus your losses. Knowing when to cut your losses, knowing how to minimize your losses, like I just showed you, scaling in, understanding where key areas of support versus resistance are, understanding how to chart out a coin, understanding where price should reverse at, where price should be pushing up to, understanding when price is actually supposed to come back, right? We've been on this major push to the upside, over 17% without breaking the uptrend in 1 day and 4 hours. That's huge. So many people probably see this as Bitcoin crashing, and they might be right. But to me, I see this as a proper retrace, and I'm actually looking for price to quite possibly come down as low as 34,738. At the very least, I wanted to see price come down to 36,133. So I surely would not be shorting or running into a short on a retrace when price is more than likely getting ready to push to the upside. I can then come over here, take a look at RSI. We know that on this push up here, what happened? RSI was peaking out, and I can already see divergence, guys. I can see it right here. So we're gonna save this for another video. I wanna show you guys this and dive into divergence. It's gonna take me a long time. I don't want this video to be too long. Do me a favor. All right, squad. So that's a wrap on how I've been crushing it, playing the downtrend, using a lot of tools and resources that are at my disposal, not believing the FUD, not listening to the hopium, but actually playing the market, playing the game, playing the charts, reading the charts, not the FUD, guys. Love you, squad. Hopefully this helps you guys out. If it did, do me a favor, smash that subscribe button, hit that like button, drop a comment below. Let me know if this strategy is similar to yours. Let me know if there's any other indicators that you guys have been using that you really like. I'm really diving into these indicators and trying to, discredit the crappy ones and then really back test and prove the good ones. So if you guys have any great indicators, do me a favor, drop a comment below, drop a link below. You can actually share the links from TradingView. So can't wait to see you guys in the next video. Next one's gonna be showing you guys how to spot divergence and how to use divergence, because divergence is your best friend, and I can see it over here on the charts right now. This is gonna be awesome. Love you guys. Peace.